The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. We're a couple of minutes past starting time. Lovely to have you with us today, and much to talk about. Do please, somebody post under the question box. Here we are. Hank's first in, Janet, up in Canada. Good to have you with us so you can hear me. That's the main thing. Lovely to have you here, folks, of course, as usual. And good to have all the regulars with us, including a few we don't see much of these days. Akshay is here, and Hank and Janet, of course. Jen Yu, Justin's Hank's son. Keith is a long time Daniel Code member. He's going to be starting a tutorial sometime next week. The Murph, of course, always good to have him here. Peter, he's the short-term trading man, very good at it too. And Scott, Tom, yes, well, we've missed you a couple of times. Tom's glad to have you back. It's good to have you here. Trevor and others as well. Well, you know, what can we say? There's just so much happening in the world at the moment that markets are just being torn left and right by news release. It's having a bigger impact than usual, and some of these issues are pretty serious stuff, aren't they? But anyway, let's move on and let's have a look at all the exciting stuff that's happening, and let's move along now. So I've called this webinar the Almighty Dollar, and that's something that I guess most of us have got used to. It's been the position. We've seen the dollar as the strong currency, as the world's reserve currency, and there are now concerted efforts against that. When we have a look at some of the numbers today, the answer is, boy, it's going to take a lot. It's going to take a lot to move away from the U.S. currency. It's just so powerful, so dominant in international finance. And anyway, last month in the Currency War webinar, I talked to you a little bit about the action by many countries to devalue their currency for competitive trade purposes. And this is becoming a real issue now, and it's of vital importance to the United States. So the dollar is used for strategic purposes, apart from the obvious that it's the reserve currency because it's the dominant currency in the world. It's also used for strategic purposes, and we're going to talk today about the SWIFT financial system, and which is pretty much controlled by the big US banks. That's the power tool there, and the US, of course, is quite happy to use its currency and its dominance of the SWIFT system as part of its global strategy. The sanctions that you read about all the time that are imposed on by the US on various countries and individuals, that works very much through the SWIFT system, which is the global money clearing system, if you like. And anything that touches a U.S. bank, of course, is subject to that. And the U.S. banks are so big, so powerful, so dominant that they're a huge part, the dominant part entirely of the SWIFT system. So the position as the world's reserve currency gives the United States enormous economic benefits, particularly in the issuing of funds of the low interest rates that it has to pay, and having the world's reserve currency creates a very, very dominant financial position. But apart from its pure economic benefits, there are huge strategic benefits. And what we've seen so far, let me make sure that this page has changed for you, that you're seeing what I'm seeing. Is that what we've got used to, certainly post-war, is a unipower world, a world where there's been a dominant economic, military, true global power, and that's something we accepted very much right through since the war. And of course, that became more markedly so when Reagan challenged the USSR as it was then, and then being run by Mr. Gorbachev, and the Berlin Wall came down, and what actually happened is Reagan crippled the USSR economy by the spending he was doing on largely defense-related matters, and the USSR tried to respond to that, and essentially it sent them broke. That was the short version of the great debt that the world owes to the late President Reagan. China at that stage, which is now very much center stage in all our discussions, and its rise to power, its global rise to power, can really be dated from 2001. So it's much more recent than most people think. And 2001 marked the year that it was admitted to the World Trade Organization, and that was essentially a decision that President Bill Clinton made. The US is so dominant in these big institutions due to its funding of them and its institutions and its banking powers, that US pretty much has a veto over most of the important things that happen in the World Trade Organization. And Clinton, for whatever reason, largely unknown to me at least, decided that China were excellent global citizens and responsible, and that they would abide by the conditions that all of the countries in the world take on when they join the World Trade Organization. Now, of course, that didn't happen. In fact, China is absolutely notorious for its institutional ability to ignore legal norms, business norms, and to simply, not simply, to pointedly pursue its own economic benefits. So Bill Clinton let them into the World Trade Organization, which really put them in the status to just really accelerate their growth as a huge economic power. And from that economic growth, of course, they channeled a fair bit of it into their various military ventures, and have become very rapidly a world military power as well. We can see that this is since the fall of the Soviet Union, this is the first concerted attempt by another country in the world to challenge the hegemony, the power of the United States as the not only the economic virtues of being the holder of the reserve currency, or the issuer, I should say, of the reserve currency, but its military position, its strategic and tactical aims around the world. And China recently bought out, when I say recently, 2 years ago now, what it called its Belt and Road policy, which sets out a blueprint for the various steps that China's taking to create a global, a world economic system that, at least in its sphere of influence, is going to allow China to dominate. And we're seeing that in countries like India in particular. China's developed a major marine port, a naval base on the west coast of India. It's doing much the same in smaller, less relevant countries where it's pursuing a policy of soft loans, and essentially it makes inroads to these countries by funding building projects, development projects on long-term loans, and eventually it gets to the stage that the countries can't service that debt or pay it back, and so China then takes other concessions like ports, strategic assets. That's caused a bit of a problem, and the United States is certainly well aware of it and its potential. And much of it's gone very sotto voce. The Chinese have gone from blaring that as their blueprint to being much less outspoken about it, but simply because the dragons stopped advertising it, it doesn't mean that it stopped working at it. And what we're seeing is, with the growth of the economy in China and the ability of it to funnel those massive funds into the military, we're seeing a genuine effort to get rid of the uni-power, to get rid of the US's position as the dominant economic and strategic power. And the US is very well aware of this. It's, it knows what's happening, and that's really what a lot of this argy-bargy is about. So we know that the US maintains its global power by dint of its powerful economy and also its military dominance, of course. But its financial clout goes much further than that. The ability of it to dominate institutions, think of NATO, think of the IMF, think of the World Bank, if you will, certainly think of the SWIFT financial system, which we're going to talk about at a bit more length. That is real soft power, and the growth of China is a real challenge to that. So China, of course, since they conned President Clinton into letting them in to the World Trade Organization, has merrily gone along its way, ignoring any decisions and rules that they didn't like. And, to some extent, you've got to be honest, so have the Western countries when it suited their purposes. And you finish up in a World Trade WTO dispute, takes years and years to resolve. So it's actually just a continuation of the China's policy to the world. We've seen that with what's happening in the 9-dash line in the China Sea, the Yellow Sea, which I've talked to you about on many occasions, and that's where they've claimed territorial waters all the way down to Borneo and across most of the Philippines, territorial waters. And what they did in the last decade is they've taken all of these small islands, some of them are not much more than shoals, and they've put in a stack of dredges to build up the land mass to the stage that they're capable now. In fact, they have airports that will handle jet fighters, jet cargo planes, and they've militarized most of these, the Parcel and the Spratly Islands in the South China Sea. They're weaponized. They have military personnel posted there. They have weapons on those islands, those man-made structures, largely they are, and they keep pushing that territorial claim. That claim was taken to the International Court of Justice for arbitration, and after a long hearing, they came out with the verdict that China's claim to that whole territory, which stems back to an alleged agreement right at the end of World War II, was not valid, and what they've managed to do, largely under Obama's watch, is that they've established these positions of great force over an area that is incredibly important because so much of the world's trade passes through those waters. So it did there just what it's done with the WTO. It got the ruling that it denied their claim, and and they've simply ignored it. It's a very difficult question to think how that could ever be enforced short of war. So the obvious tool of dominance is military power and the diplomatic clout which flows with it. But the US dominance of major institutions, World Bank, IMF, NATO, they all merge to support the US hegemony. And collateral to that dominance is the position of the US dollar. But one of the US's biggest tools is the SWIFT system, which is the international bank clearing system, if you like. It's a based in Belgium. It's a Belgian company that's owned. It's a cooperative of the major financial nations, and the US has a very fraught relationship with SWIFT because it's often using SWIFT as part of its sanctions, and if SWIFT decides to cut off a country's use of it, as it has with Iran, then that country simply can't transact any transactions that are involved with US currency or that touch any one of the major US institutions. And that's what you're actually seeing when the US announces sanctions against countries and also against individuals. That follows from there that the SWIFT system will go along with the US's wishes. Now, that's a pretty fraught relationship because, of course, the other big player in the SWIFT system is the EU, the European Union, and they are opposed to almost everything that the US wants to do, which is kind of weird when you consider the dominance of NATO in Europe. As Trump keeps saying quite legitimately, the US is bound to protect all those countries that are in NATO, all of which apart from the US, most of them are in the European realm. But the EU is less than cooperative. It sees itself in competition with the US, and it opposes it on any decisions involving SWIFT. So that's a terribly important tool because you probably use SWIFT at some stage. Your bank will have a SWIFT number, and if you have the SWIFT code for your bank, the speed and the certainty of any economic transactions is enhanced in a huge way. So the ability of the US to use its influence over SWIFT is a huge status and strategic tool for the US, which of course is constantly opposed by the EU. So When we think of this dollar dominance, you undoubtedly have read articles that various countries are opposing the position of the US as the reserve currency. For example, at the moment, as you know, the US has imposed new sanctions on Iran, and it's withdrawn from the treaty that Obama negotiated with Iran, which was more in the, I guess, in the hope that Iran could be coerced or enticed, if you like, into not proceeding with its nuclear program. And Trump has withdrawn the US from that treaty, which means that these sanctions on Iran are really, really biting. Only earlier this week, it may even just have been late last week, the UK mounted a military operation to put a load of Royal Marines from helicopters onto a huge oil tanker approaching the Straits of Gibraltar, the entrance to the Mediterranean, with the allegation that that particular vessel was carrying Iranian crude, which of course was targeted as one of the major targets that the US is using to try and get Iran to back off its intention and its probably now its ability to create nuclear weapons. And this Iranian sanctions issue is really very close to blowing up. We've seen some attacks on oil tankers coming out of the Straits of Hormuz, the pinch point for the international oil trade from the Far East. And now you've seen also the shooting down of a US drone in that area. And now we've had a large tanker arrested and being held by the British government in Gibraltar. And that followed with some attempts by Iran to kidnap take hostage a British tanker coming out of the Straits of Hormuz, which was blocked, frustrated by the presence of a British frigate in that area. But the tit for tat and the Iran's struggles to avoid all of the sanctions that the US has put on them is also going to the point of the SWIFT system that Europe, mostly America's so-called allies, has set up an alternate payment system in direct competition with SWIFT that will allow Iran to recycle and to use its oil revenue and other revenues, which are really the subject of the US sanctions. So this whole issue of sanctions is very, very much tied up with control of large parts of the US economy and the dominance of the US monetary system through its major banks and through its control, tentative though it is at times, of SWIFT and of the major institutions. So you'll undoubtedly seen in articles, they pop up periodically. They're a bit like the gold articles, you can count on an article popping up every few weeks that, gold's going to boom and that it's gold is real money, which of course it isn't. It's a commodity, or a barbarous relic, the barbarous relic, somebody called it once, a leading economist. But if you have a look at this dollar dominance, the IMF publishes a list of aggregate foreign reserves, and you can see that US dollars is 62% of the total foreign monetary reserves in the whole world. And look at the comparison of what's next. You've got the euro on 20, the Japanese yen on 5, the British pound on 4, the Chinese renminbi less than 2%, and then you've got the the really small economic countries in relevant terms, or relative to the US, I should say. Canada at less than 2%, and Australia not much more than 1.5%. So if you bear those figures in mind, you can see that this idea of dollar dominance and US dollar as the reserve currency is a very, very big deal. It's well cemented in, and that position is well deserved, and will be very strongly defended. But the ability of the US to impose these financial sanctions is a massive part of what it's doing. So what is this SWIFT system that I'm talking to you about? Well, it's a network of financial institutions that sends and receives money in a secure, standardized, and reliable environment. It's not foolproof. There have been some quite amazing thefts, if you like, of funds where hackers have managed to crack the SWIFT system, but it is the preeminent system of financial transactions. And the US uses SWIFT quite blatantly to enforce its sanctions. So in some ways, SWIFT becomes a pawn in the battles of world finance, and particularly, as I've said, as the EU, most of whom are supposed US allies, it constantly tries to limit that US influence. There's an ongoing battle about that all the time. And very interesting if you go to Wikipedia and look up what SWIFT does. Its links and its dominance of financial transactions is huge. It's a terribly, terribly important institution in the financial scene. What we're talking here about is trade wars and deglobalization, and this general issue of what globalization's done, and the real attempts now, not only by the US, to undo that globalization. And it's argued in Zero Hedge. If you don't read Zero Hedge, incidentally, you should. It's got a very different view of the world that you get from major media. But I've always found it to be very accurate, very truthful, and immensely entertaining, because they have a wonderfully skeptical view about financial markets. And as they came out yesterday, here's Euro Draghi on behalf of the European Central Bank, and Powell, who's now become a dove at undoubtedly at Trump's pushing, poking, urging. In Australia, we've had the Reserve Bank of Australia has brought down two back-to-back interest rates, which is a very, very unusual happening. And these are all signs that you really need to think about. Why would the central banks of the major powers and others be so concerned that they're pushing soft policies, they're pushing QE, they're pushing lower interest rates, negative rates on bonds? Absolutely extreme stuff that you'd expect to see at the bottom of a global recession. But in fact, what we're seeing is this massive loosening and financial stimulus when markets are at or near their all-time highs, with a couple of exceptions. But the US markets are near all-time highs. British markets terribly robust. Australia's just made a decade high, 11-year high. It is just scratch your head stuff about why are these central banks so dovish, so determined that these economies that on face value appear to be performing terribly, terribly well, why are they now the subject of such a move to lower interest rates in Europe, to continue QE? It's quite extraordinary. There's a few canaries and a couple of vultures floating around. For example, Deutsche Bank, previously at one stage the biggest bank in the world, is undergoing a restructuring. They're laying off 18,000 people. You sort of scratch your head about that and say why, but the real answer seems to be that they got into all sorts of trouble in the big 79 crash, and that they warehoused their bad debts, their bad loans, and those problems eventually have come back to haunt them. Madame Lagarde was then the foreign minister for France, and I remember her urging the US at the time to include some French banks in the US government bailout, which they did. And there was a wonderful report about that, which promptly disappeared by the very next day, and I wasn't quick enough to grab it for you. But anyway, the sins of history have caught up with Deutsche. And apart from that, though, I mean, you can't get past the fact that the US economy, the biggest in the world, is markets are at all-time highs. Labour force is growing. Unemployment is all-time low. Same in Australia, same in other countries. Why, therefore, is there this need for such intense stimulus? It's as if the central banks know something that no one else does know, and that may be the case. So the move through globalization, of course, largely based on wages. And what you've had is some countries where wage growth has got out of hand. This country that I live in, my country, Australia, it's the world champion at that. And McKinsey actually say that the repositioning of businesses to take advantage of low labour cost is actually only 18% of global trade. Well, from a great height, if you say that, it sort of says, well, there's no big deal there. But in fact, if you look at the micro of what's happening, you take a country like Australia that had a huge car industry, General Motors, called Holden in this country, but owned by General Motors, and Ford have been hugely dominant figures in the Australian automobile industry. They've had massive factories in this country. They've built great cars. They've had built great engines, and eventually they've just simply failed here because of the enormous wages that we have. So those of you who are interested in the $15 an hour minimum, be wary. You might get what you're asking for, and one of the consequences of that labour becoming uncompetitive is you lose the industry. The manufacturing industry goes. Australia's totally hollowed out as a manufacturing country now, and It survives on its natural gifts. It's primary production of grains, beef, cattle. Its minerals, natural gas, iron ore, of course, and coal being the biggies. But there's no third-party ongoing value added to that stuff. It's just dug out or pumped up, and off it goes to the export market. And one day that's going to catch up with Australia as well. So beware, if you're part of the minimum wage push, there is a cost. And of course, that's been the great differentiation for countries like Vietnam and China, and other Eastern countries, that they have massive levels of cheap labour that's been educated, skilled, and the appeal has just been such that so much of this manufacturing processes have gone there. I mean, you even look at a situation like Taiwan. The number of Chinese factories, Taiwan has outsourced massive amounts of its industry to China. And that's been the globalization move to place your production where it's closest to the assets that it needs. The major one over the last couple of decades being the labor cost arbitrage. So this whole push to deglobalize against globalization, Trump urging countries, American companies, to bring their production back home, is an attempt to reverse the push of globalization, and it seems to be having some success. For example, the amounts of production that are going to be scheduled coming out of China and going back to Mexico. So they've got some part of the cheaper labor structure, but they're close to their dominant market in the US. Those sort of moves are quite extraordinary. And that goes with this issue of being the reserve currency. So if you look at what's happening around the world pretty quickly, look at this issue with China and the trade war. And interesting, with Huawei, there's some informed thought that Huawei is the flagship of the push into artificial intelligence. And the forward thinkers believe that the economic future, one of the great drivers, is going to be artificial intelligence, which will work on data chains. So if you think of the big data chains, you think of the Facebook and Twitter and what have you, and in China you think of Tencent, which is actually a gaming company, but massive and tentacles everywhere. And Huawei as perhaps the leader in the development of artificial intelligence, and the data mining of these huge databases. That's where the real value is for those businesses. And there's some quite intelligent forward thinking that that's the real risk of Huawei, whilst the consumers of the daily news are more concerned with backdoors, trapdoors, as they call them, that would be security threats. The real threat is the dominance of Huawei in data mining. Now, I'm an attorney, so I know, and what's more, I'm an aged attorney, so I know almost nothing about technology, but take that with at least it's worth a thought. I think that probably there's a a lot more to this Huawei issue than we know. Look at Russia. This is now the enabler of the local currency trade with China. It's setting up all sorts of agreements that allow it and the Chinese to trade without US dollars, to use their local currencies. Observe what's happening with Turkey at the moment. You may be aware Turkey was very, very keen, as an ally of the United States, very, very keen to buy the Patriot missile system for its air defense systems. And the US hemmed and hawed and wouldn't make them available, and eventually Turkey got sick of it and went off and contracted with Russia to buy their S-400, their anti-aircraft missile system, which is very, very sophisticated and very, very good. But of course, Turkey is not only a NATO associate, it's part of the manufacturing chain of the F-35, America's new fighter plane. They actually make some of the parts of that. And the US is extremely worried that letting Russians, who will be using and teaching the Turkey on the integration of these new missile systems that Turkey's bought, could be very, very real serious security issue as far as the technology of the F-35 is concerned. And the United States is saying to Turkey, you can't do it. We'll stop delivering the F-35s that you've already paid for. And Turkey's saying, too bad. We wanted your Patriot system. You wouldn't sell it to us. We had to get something else. And we've done it and paid for it. And we've also paid for our aircraft. We want our aircraft. And US is saying no. So potential of that to get a whole lot more explosive is very, very real. You see what's happening now with Iran, the nuclear fuel. They're now past the threshold of refining nuclear fuel. And what's happening with the oil embargo, I've touched on that. The capturing of the taking of one of their ships by the Royal Marines on behalf of enforcing the US sanctions. The issues coming out of the Straits of Hormuz. I mean, this is big stuff. India is doing much the same as Turkey. It's flirting with China over its, under its Belt and Road policy. China's now obtained a deep water port on the west coast of India, terribly valuable strategically. And India is also dealing with Russia for the supply of weapons. So if you wonder why all of a sudden Mr. Trump is making noises against India, that's why. And more troubles with China over the Taiwan issue. The US has just agreed to sell its latest big load of weapons. I'm not sure if it's 2 billion or 4 billion, some massive amount of money, including 100 Abrams tanks and other supporting issues to Taiwan. And of course, China maintains that Taiwan is a rogue colony, that it's still part of China, which, of course, the Taiwanese would reject that. Taiwan came into being essentially after Mao Zedong's communist troops had routed the right-wing capitalist then governors, rulers of China, and they fled to Taiwan and set it up as ostensibly a separate country, but China's never accepted that. You can see what's happening now with my own country. The United States was kind enough to grant Australia an exemption on its exports of steel and aluminium when they put those sanctions on steel and aluminium worldwide. And of course, the thin edge of the wedge, as they say, or the slippery slope, Australia's aluminium exports to the US have gone up by 350%. in the last year, and Trump's annoyed about it, as he rightly would be. But wherever you look, if you can follow all the threads that are happening, there's drama for the US on almost every front. And that comes into this idea of deglobalization and real attempts to break the monopoly over international finance that the US has. ZH has recorded an interesting article saying that the political risk and financial costs of the trade war over the past year have served to accentuate what some experts call the balkanization or deglobalization of supply chains, with companies seeking to produce closer to their consumer markets to avoid uncertainty in the changeable trading environment, as well as to mitigate the cost of tariffs. So one of the proponents is a company that's enabling new business startups of very big established companies into Mexico. And their statement was, a few hours over the border is nothing compared to a few weeks from Asia. That's a big issue, isn't it? And the new treaty with Mexico still hasn't been confirmed. That's all part of the ongoing struggle. Now, the big bugbear in world finance at the moment is deflation. As a non-economist and as a mere consumer, I would have thought deflation was great. For the vast majority of my life, the emphasis has been on trying to control inflation, with inflation running away. Well, with all of the financial easing that's been going on since 2009, which was undoubtedly necessary then, but certainly hard to argue it's necessary now. We've lived in an environment where inflation's been the bugbear. It's been the efforts to control inflation that have dominated the financial cycles of worldwide, everywhere. Now, all of a sudden, we have this huge fear of deflation, and deflation to economists and central banks is the end of the world. And one of the most important parts of it is that inflation allows lenders to devalue their repayments of the loans. In other words, deflation over the long term allows borrowers to repay their loans in a lesser value of currency. That's the big untold story behind inflation. So we've now gone from an era where inflation's been the boogeyman, it's been the bugbear, to where central banks now are seriously worried that they're not meeting their target for inflation. And most of these central banks have a target of 2 or 3% inflation. In other words, they're trying to get inflation up. But because of all of the financial stimulus and the rollout of just almost unimaginable liquidity, there's a real threat of deflation. So that's what's behind this universal European Central Bank, US Fed suddenly getting very dovish. Same in Canada, Australia. The Australian Federal Reserve just put through 2 interest rate cuts in quick succession. Very unusual. It hasn't happened for many years. And this is happening at a time that the Australian share markets recovered its 11-year high, and markets in the States are at all-time highs. I mean, it's a real problem, and you know the the media are not going to tell you the answer because I don't think they understand the answer. But the answer is this total fear of deflation by all central banks and influential economists. So keep thinking about that and try to understand it better. So who are the people that have been doing this? Draghi at the last ECB meeting a couple of weeks ago. Powell at the last Fed meeting turned into a total dove. Reserve Bank of Australia, as I've told you, 2 consecutive interest rate reductions. Perpetual stimulus in Japan. Now, there's a very, very good argument to say, and we're going to run out of time today, but there's a very, very good argument to say that while Trump's worrying about Europe not paying its share of NATO, worrying about trade imbalances with China and India and many of its associates, Japan is slipping under the radar. The country that's done most to devalue its currency is Japan, and its trading surpluses with the States are massive, absolutely massive. But of course, Japan's a very close ally of the States, and it's getting different treatment. There hasn't been any banging on the desk yet, but that's something that's skipping past Trump. It's one of the few things that he hasn't realized. Now we get Madame Lagarde, the ex-French foreign minister, and a totally useless IMF chief, of course, but the political connection, of course, she's now slated as the next governor of the European Central Bank to replace Draghi. And she, I think she's very, very limited. So, start thinking to yourself, what is so bad about deflation? As consumers, we've paid the penalty for inflation most of our lives. What would be so bad about a bit of deflation? Well, it's anathema to the banks, but should be pretty good to us. Now, Bill Ford wrote to me about the euro dollar. Bill, I don't trade that market. I'm not an expert in it, but here is the 3-month market for euro dollars, and as you can see, they've had since December, they've had a massive rally. They're up very close. They got almost to a 59% retracement of a terribly important swing, and that Daniel code level there has proved to be very, very solid resistance. I think that probably supports your idea that you were talking about, that there is believed to be a shortage of euro dollars, and that's why it's been bid up so strongly. So there's the chart, mate. Euro dollars, for those of you who don't follow it, are US dollars outside, that are held outside the United States, and therefore they have much fewer restrictions on them than the US dollar, and what are the trading options in regard to them. Okay, so this is part of the story we've been telling you. This is Japanese yen against the dollar. You can see since 2011, the US dollar's been pretty much on a one-way streak until 2015. A big pullback, and what you're seeing since then is just a battle between the people who want to buy the dollar and Trump's and the present administration's attempts to lower the dollar. If you look at a shorter term, this is a 24-day chart, which is a Daniel code equivalent of a monthly chart, if you like. Trump is typical businessman, particularly in the property business. He wants low interest rates, and he also wants a weaker U.S. currency. What's the point of the cheaper US currency? Well, it helps your trading position because it makes your imports more expensive and your exports easier to sell. They're more valuable. Quick look here. The euro, I've touched on this with you before. All the way since 2007, the euro has been on a one-way trip down, 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 down. Had a little rally through 17, heading down again. But the euro has been a serious market manipulator of its currency, although no one likes you to say that. This is what's been happening in Australia. Canada is much the same. These are the countries where their currency is usually priced on their exports. This is one of the most ridiculous currencies in the world. In 2011, it was $1.08 US. How it could ever be at that and stayed up in that near over a dollar range for a year and a half. Quite extraordinary. But look what's happening now. Down, down, down. And a couple of the recent interest rates have been cut off. This should go down further still. And here's your dollar index. Now the dollar index is the US dollar against a basket I should say, of trade-weighted currencies, and you can see that it's really been range trading. It's range bound. Both the 2017 high and low came at Daniel code levels. You've seen that chart before, and it's range trading in there as the world wants to bid up the US dollar because it's the strongest economy, the strongest currency, the strongest everything. But the administration wants it to go down. So there's the conflict there. Okay, folks, and that's about us for today. So I hope I've got you thinking about why deflation is a good thing and why all of our governments are so opposed to it, and our central banks. And I hope I've got you thinking a little bit about the deglobalization movement as well. But be assured, in my view at least, the almighty dollar is going to stay that way for a long time. Okay, if you are interested, folks, in becoming a super trader, please email me at jneedham@thedanielcode.com, and I'll be very happy to talk to you about the Daniel Code trading tutorial, which will teach you everything you need to know about trading and make you an elite trader. We've done that for many people, most of whom are with us today, so we're delighted to have that. Just send me an email, tell me where you live and a phone number, so I'll know from where you live what's a reasonable time to call you, and I'll be happy to call you. We'll have a chat about your trading and what a Daniel Code tutorial can do for you. If you haven't already been part of the Daniel Code, I welcome you to have a free trial. Just go to the website, www.thedanielcode.com. There's a link there for free trials. Just click on that, and that will take you through to give you a 14-day free trial of everything we have, our TO3 trading program, our TO3 Plus trading program. We don't talk enough about that, but just doing today's signals, it was quite extraordinary how many of these our TO3 Plus signals have been elected. For yesterday, we had 1, 2, 3, 4, 5 TO3 Plus signals, and 2 carried forward from the previous day. In currencies, all of them, 7 of them were elected and profitable, some more than others. We had a sell on Wednesday for the US dollar index, buy in the S&P, sell in gold, buy in gold, then sell today, and corn and natural gas was a nice trade. Okay, so folks, that's about it for today. This is our compliance statement, which I'd like to show you because it's very easy to lose money trading if you don't know what you're doing. So I do urge you, be aware there are risks in trading, and better still make sure you've learned to trade from the Daniel Code so that you're a safe and a profitable trader, because it's easy to lose money and hard to get it. Okay, so what have we got here? Tom's gone. Sue. Yes, Sue. I always have to welcome our ladies, in particular Sue's a tutorial lass. She lives up in Cairns, far north Queensland. Sorry I was late. Problems, building renovations, all's okay. You don't sound well. I'm actually very well, actually, Sue, because my wife says it's because I've given up smoking. I don't I don't think that's so myself. I've been a very heavy smoker for 40 years, I guess, and I loved it. But anyway, I have given it up now. So no, I'm great, and great to have you here. And Terry will be posting the video later today if he's able to get to it. If not, he'll post it tomorrow, Sue. So you'll have the video on the Daniel Code website that you can review at your leisure. Okay, thanks, Sue. Hope all's well. Hope you're trading as well as you were. Good luck with the trading. That's it, folks. Thank you. It's Friday down under at 11:30 in the morning, and my orders for the night are placed, so that's pretty well the end of the week for me. So do enjoy your weekend, and I look forward to talking with you whenever we next meet. Murph, thank you, my friend. Glad you're enjoying it. Adrian, you too. Have a great weekend, folks. There's a wonderful world of trading that's never going to go away. And remember, it doesn't really matter to us whether markets are going up or going down. They pay exactly the same on futures and spot forex, but they do tend to go down a little bit faster than they go up. So I'm always looking forward to chaos, because chaos brings volatility. Enjoy your weekend, folks. Bye-bye for now.